Hi, and welcome to Future Focus, a financial strategies podcast where we make the complex simple. My name is Troy Branch, and I'm joined here again, minus Keely Joe, but we still got Jacob.
Troy, still got the hat on.
Still got the hat.
Still liking it. Made it through part one. It's still on for part two.
Wind still blowing. Again, no cafe au lait. I got a second Fresca, and I'm enjoying the afternoon. How's that?
I like it.
All right. So what we did in Myth or Reality Part 1, by the way, you should, if you didn't see Part 1, you need to hit pause, go back and check out Part 1, go back and check out the episode in between, and now you come back to Part 2. Matter of fact, go back and check out the whole back catalog, right? Because we want you to go ahead and, we're doing some good stuff here. So what we're going to do today is we're going to pick up on Myth or Reality, Part 2 of our conversation regarding life insurance. And again, I'll tell you, don't turn away because this time we're going to talk about beneficiary sort of myth or reality. What should we be thinking about? What's the myth or reality as it relates to beneficiaries? We talked life insurance and we talked ownership. In our, in the first part of this conversation, now we're going to talk, beneficiaries and beneficiary designations and why they may or may not be important. All right, we're still joined by our voice, right? We're still joined by our voice. Our intrepid producer Cassie is going to ask us the questions because we're minus Keely Joe, who is I don't know when she's coming back, but eventually she's going to come back.
I think it went so well with part one. Yeah, let's keep it going for part two of having Cassie ask us the questions. That way I get more of you talking and in the conversation.
I don't know if that's a good thing, but we'll roll with it for now.
Yeah.
All right. So Cassie, I think we're ready to roll right into the first question. Cassie's going to ask us a question. We're going to answer myth or reality first, and then we'll move into the discussion.
Yep. Works.
All right.
Okay.
Lay it on us, Cassie.
Myth or reality? As long as I named a primary beneficiary, I don't need a contingent beneficiary.
So this goes back to, I forget what question it was in part 1, where this is a reality, but probably not best practice.
I remember a few episodes ago, you gave me a hard time for not answering a question with the one-word answer.
Yeah.
So that was a very long way of answering the question. I'm going to make it shorter. I'm going to say best practice, myth.
Best practice.
Because in terms of for today's conversation, hey, we're talking best practices. So in the eyes of best practice,
that's not necessarily. Best practice is sort of like we've added that into the context, but the episode is myth or reality.
I need context, Troy.
Trust me, I'm a person that appreciates context. We all know that.
All right.
But the episode is myth or reality.
All right. I'm going to say myth.
I'm going to say reality, but not best practice.
All right. And so when people hear the word, we just said, hey, primary beneficiary, contingent beneficiary. We should probably have Cassie walk over here, throw something in the jar for using those phrases without describing them.
Oh,
but
I didn't say it.
But instead of making Cassie come and put her own pebbles in, we'll describe what primary beneficiary and contingent beneficiary. So primary, that's that first layer of the beneficiary. So if something happens to the insured, the primary beneficiary is the individual or entities that's going to receive the death benefit. Contingent beneficiary, we'll call it the backup beneficiary. If something happened to the primary beneficiary first, that contingent is that next layer, that who's going to get it if there is no primary beneficiaries listed. So even just by hearing that, contingent is the backup. So if something happened, what could possibly go wrong if something happened to the primary, but there was no contingent listed?
What could go wrong?
Yeah. What?
Well, you end up if the contingent is no longer available, you could get back to that nasty probate word, right?
Yeah.
Like you can end up where you had a vehicle that had a beneficiary designation that it would have moved outside of probate, and now if we don't have a contingent beneficiary, primary's gone, we don't have a contingent beneficiary, the only place for it to go is to that person's estate, which means you're in probate.
The deceased person's estate.
Correct.
Yep. And like you said, probate, that's going to cause delays. That could cause extra expenses and administration. as well as that death benefit of life policy not going to the person that you wanted it to go to.
Right.
So yeah, no, I agree. So that's where I think having at least one contingent beneficiary listed, maybe even more, makes a lot of sense. That way you make sure you don't run into that issue. Or even if it's having if you have a trust or have a setup, having that trust be the contingent beneficiary.
It's funny because my kids are moving into their 20s, and they're for the first time they're filling out documents and stuff where it's like, Dad, what is primary beneficiary, and what is, do I need a contingent, and you literally just have this discussion, especially if you have folks that are for the first time, they're entering employment for the first time, and they're getting all these documents for health and retirement and life insurance or whatever it may be. Having this discussion and understanding why you want to have a primary beneficiary, why you want to have a contingent beneficiary is very, very important.
Or, you're married, you get the forms, whether it's work or outside of work for the application, you name your spouse as the primary and just move on. Well, yes, that you can do that, but not having that contingent is going to maybe put some complications into what might happen if you pass away, and who then the policy go, or if the beneficiary passes away.
Right,
so
right.
No, and I think that's why we're having these conversations here. Yeah, it's a little bit more on the technical side of the questions that we get on a team, but it's these best practices that we see happening a lot. So and like you said, it's the people that are just the individuals, the college students that are just entering the workforce, hopefully having some of them listen to this to provide them with that level of education.
Yeah, they don't get, in a lot of cases, they don't get this type of education, which actually leads me to remind everyone that this is just education. Like it's not just education, it is educational. We're not intending to have have a specific recommendation. Certainly, I would say it's helpful to sit down and talk to someone, whether it be parent, whether it be financial professional, whoever it may be. It's helpful to sit down and talk to someone. But what we're doing is purely educational and not intended to be a specific recommendation.
Right, get you thinking, get you understanding why these things are important, and then talking to the right person if you have those additional questions on your situation, because we talk about the personal finance is personal, so your situation might look a little different than the next person, but it's at least thinking those questions on, here's why these are important topics.
Absolutely.
Yep.
You good?
All good.
Yeah.
Okay.
Right. What? Oh.
Just waiting for the next one.
Okay. A myth or reality? Naming a minor as your beneficiary is fine.
Fine. Such a technical term.
Yeah.
Myth.
Yeah, that one's easy. Yeah, myth.
And because and you think, this feels natural. Hey, I'm a parent. You're a parent. You're probably thinking, hey, I want to name. I want to name my kids as the primary beneficiary or the contingent beneficiary. Well, so those dollars go to this death benefit, and the dollars go to my kids. If it's the contingent, something happens to my spouse. All of that seems well intentioned, but it's not something you can actually do, especially and we're talking about kids as in minor kids for this question, because that's where this comes up a lot. Mm-hmm. So for minor kids, it's a myth.
Yeah, absolutely. I don't have a whole lot to add to that other than sort of personal experience where, there was a time when I would have had my spouse as my beneficiary, let's say, and then I would have had a trust. I think I actually still do have a trust because my kid, that would have been the beneficiary of the life insurance and other stuff, but specifically, for life insurance, that would have been the beneficiary of the life insurance. The benefit of that is the trust outlines. One is sort of is the holder of the life insurance benefits, and it has instructions that can extend beyond them being a minor. So, for instance, hey, maybe I don't want to give my children, if something were to happen to me and my spouse, I wouldn't want to give my children a lump sum at 18 years old or 21 years old. Like you offer some flexibility when one, you're not naming a minor, two, you have other things in place to one, avoid probate, and two, to build some structure around how your kids in this case are going to receive those dollars. Like you still don't want to mess your kids up, right?
Yeah. And I think, and the reason why you mentioned trust, because when we just come back, I mean, from a minor's perspective, minors can't legally own or receive anything. So even if someone did have their minor kid listed as a beneficiary and those funds were being directed to them, they can't accept them, which means those funds, usually you get court involvement in that situation, guardianship or conservatorship, who then has to oversee and direct those funds until they get the age of majority.
Right.
And then so it's just that additional time and complexity and costs and may not.
And control and loss of control.
Yep. And it's just might not be the wishes of that person. So like you mentioned, from a consideration standpoint, it's, if the plan is, hey, I want this death benefit to benefit my minor kids, having the trust as a beneficiary is a consideration, is something that we see a lot of.
And it doesn't need to be, when people hear trust, like I'm not saying, it doesn't need to be like this, like the most complicated thing. It can be in this case, a revocable trust, one in which, it could be a revocable trust. And we've talked about revocable trust before.
Well, it's in the jar. You know what? If you can get your hand in there to take it out, you can take it out of the jar.
I can see that blooper reel. Me getting my hands
Go ahead and try.
But anyway, a revocable trust is one in which I lay out instructions, but I still sort of have ownership on. I'm not giving the assets, whatever it may be, whether it's the life insurance or other assets. I'm not necessarily giving those away. I'm not giving up. What did we learn in the first myth of reality? Incidents of ownership. I'm not giving that up. So I still have control. It's still in my estate. But if something were to happen, the trust can manage what I want to happen, in this case with my minor kids. You see that a lot early on with younger families that are thinking, I need guardianship in case something happens to me and my spouse. And then I also need, then I want to have, I want to lay out how I want things to happen with my kids, even after they're not minors. I still don't want to get them, a lump sum at like 18 years old.
Yeah. So whether it's a irrevocable trust that we talked in part one, the revocable trust you mentioned, a living trust that's inside of a will. And I think that's why talking with the right financial professional, where if you're in that situation with minor kids, talking with someone to make sure you have that right structure in place to make sure that you have your intentions being met if something would happen to benefit your minor kids is something that that's why you may want to work with a professional.
And that's probably the biggest thing is to know enough to ask the right questions about what happens if.
Well, we see this a lot too, and we're thinking minor kids, and it could be a situation you have multiple kids, maybe you have a blended family, maybe there's a special needs consideration. All of those are different factors of why you want to make sure that designation is set up properly.
Right.
You're not going to try and get the pebble out?
No, man, that's a recipe for like a blooper reel.
That offer is still there to the end of the episode. If you so decide.
I might try at the end. No, my hand's not gonna fit in that thing.
All right, we better have Cassie hit us with number 3.
All right, Cassie. How about number 3?
Myth or reality? Once beneficiaries are set, they don't need to be reviewed.
Without a doubt, a myth.
Set it or forget it. What can possibly?
What could go wrong if I said it 15 years ago and you never reviewed it, right?
Myth too, and you think, hey, these questions are simple, but these are we're talking about because these are things we see. We
see the aftermath of
on a regular basis.
Really, this is 15 years old and they never revisited it. So yeah. So these are, like you said, this may seem simple, but we see the aftermath of when these things actually happen.
I mean, just think, major life changes that occur over a lifespan. You have marriages, you have divorce, you have birth of new potential kids for new beneficiaries. You may be in a situation, maybe you had a death of an existing beneficiary. So all those situations could cause the beneficiary designation to be outdated. And if it's outdated, it's not going to the individual that you want it to go to at the current time you're in.
Right. Absolutely. There's nothing good. It's maybe lucky, but there's nothing good that comes from set it and forget it.
No, to make sure that your policy, your death benefit is going to the right individual for your wishes, I think reviewing things on a regular basis makes a lot of sense. And that might be once every year or 2 or 3 years on a regular interval basis. But then also as those life changes occur, I think it's just something you continue to review to make sure, are my current wishes being met?
Yeah. And those things, you would be surprised. You may think, I don't really need to do it, but you would be surprised. Like I remember there have been instances where reviews were prompted because of like just conversations with, and at this point it was my like 15-year-old kids, right? Like the conversations you go, oh, okay, I didn't know you felt that way. So having those, it's not just, it's not a review on the bubble. It's also a review and encouraging those conversations in and around folks' families, so they have so that they always have a running understanding of where my family is at whatever stage they happen to be in.
Well, and then I think it's also having traction on where all your accounts and policies are at, so that a policy doesn't get forgotten about, and you you don't include that in your entire financial picture. Right. So it's just part of, and we've talked about the review process. Yep. This is just one step of reviewing things. It's, making sure your wishes are being met.
Absolutely.
Yep.
Well, that was, I mean,
that was quick. I think it was quick because you're getting ready to go on vacation. So you're like, I want to get these conversations in. I got vacation on my mind. Yep. Obviously from your look, you got vacation on the mind. So
absolutely. So question for you though. Did you see his face? Did you just see his face? Because we didn't talk about this.
Well, I know when you had that for part one, you stumped me. It's like
So here's the question for you. We talked about summer, going on vacation. Give me top 3 vacation activities.
Top.
It could be a place. It could be the thing you like to do. Like top 3 vacation activities.
All right. So for vacation, we usually head somewhere warm. So to me, I'm enjoying time at the beach or the pool. And so for that, it's digging in the sand with the kids. So I'll say digging in the sand on the beach. Mm-hmm. I enjoy going into the waves in the ocean. I still think of last summer when I was in Hawaii, and my oldest son and my middle son and I got my dad, so their grandpa in the ocean with them, bouncing the waves in the ocean for a little bit of time. So that was fun. And then I think just I feel like it's probably trying something local. Go whatever it is, trying something that's outside my comfort zone.
Okay.
So,
do you have a sort of pretty? Do you have a pretty plain palate in general? So what's going outside your comfort zone?
Yeah, I should say I would say probably something on like the bucket list idea, kind of like, hey, this is something I haven't done before, so I want to do it. Like one time we went ziplining. I had never done ziplining before, so we went and did some ziplining, which was fun.
Okay, all right.
So, what about for you?
For me, I'm almost the exact opposite. Like, when I think of vacation, usually it's the summertime. So the thought of going closer to the equator, no, I don't want to do that. So I'm definitely our best, like my top thing is usually either mountains, or low humidity. So I'm usually going north in the summer.
Okay.
And so I'm usually going north to find no humidity, and I like being outdoors and hike. Like I like sitting on the beach. I just that would I got to be moving. I got to be doing something.
No, I guess to me it's just getting away with the kids, right?
Yeah.
And so a lot of times it's just more go with the flow and see what we decide to do for the day.
We're definitely kind of pseudo foodies. Like
Yeah.
my wife and I in particular. My daughter, my son he has a very, very plain palate, but my wife and I in particular we're game for almost anything once when it comes to food.
Oh, see, I'll agree with you on that. Not having to make meals for a week is, sign me up for that.
Yeah.
Okay.
So I'm looking forward to it, and I'm like, we're on the clock. We're on a countdown right now.
Better come back with some good episode ideas when you
right.
get back from your trip.
Hey, thank you, everyone. I appreciate your time and attention. And again, I'll remind everyone to make sure you like and subscribe down below, like and subscribe down below, so you'll be notified when there's a new episode of Future Focus coming up. Hopefully, we're going to have a different process or enhancements to that process of where you can like and subscribe and where you can view or listen to Future Focus. We're continuing to work on that. Always, we love your comments. Your comments drive our content, drive the concepts and ideas that we can talk about and want to talk about, because we want to make sure that Future Focus is something that you find valuable. So again, I want to thank everyone for their time and attention. My name is Troy Branch, and this is Future Focus. Have a great rest of your day.